Gross domestic product rose just 0.3% in the March quarter. The GDP figures released late last week have dropped somewhat from a much stronger December quarter that saw 1.5% growth. Now, Chamber of Commerce President Peter McIntyre joins us with his thoughts, and good evening to you, Peter. Thank you for coming. Could you please explain to us, to the unanointed, what does GDP actually measure?
Well, GDP is quite simply the amount of goods and services produced and consumed in any one quarter or any one year. So it's a measure of economic growth, or the measure of how healthy an economy or a region or a city is over that period of time. So it's a good indicator of how we're going.
Right, so a health percentage of 0.3 doesn't sound particularly well versed. It doesn't seem like we're strong enough to weather any particular storm. What are your thoughts on this fairly small growth figure?
Well, look, at the end of the day, it's positive, and there were some numbers which we'll talk about later which did affect it. But, 0.3, the Reserve Bank of New Zealand were looking at 0.5%, and we were also expecting a slightly higher number as well. I think the immediate impact on that GDP was with our currency, and we saw offshore investors sell our dollar, so obviously they weren't very pleased about that fact as well. So, it affected on our currency markets, but it also probably meant the Reserve Bank aren't going to be so aggressive when they come to look at increasing interest rates possibly next year too, Craig.
So is that a good sign for mortgage buyers, for homeowners?
Well, it probably is, because obviously, if GDP or the economy was growing substantially, the Reserve Bank would try and slow that down, because at some stage inflation expectations are going to hit the marketplace. But so, I suspect that the interest rate markets are expecting the Reserve Bank to increase interest rates probably the first quarter of next year, but maybe that's going to be slightly delayed a little bit, so it might be the second half of next year now.
So belt tightening to come, but just not immediately.
Exactly.
Okay. With the Canterbury rebuild, plainly there's probably been a bump, some kind of effect in that GDP growth. How would you say our economy is going outside of that Christchurch bump growth?
Well, if you look at that quarter, GDP growth in Christchurch was a massive 5.5%. If you look at the other outlier, which is our rural economy, it was negative 4.7. So we had two big outliers. In between times, we're chugging along okay. But if you took the Canterbury rebuild out, our economy would be very sick indeed, very sick indeed. And we expect the flow on from the drought, the weather-related impacts, and possibly the snowstorms that we've had, the weather-related effects we've had over the country over the last week or two, to impact on GDP over the next 2-3 quarters.
So we still have more hard times slightly ahead of us?
Yeah, we expect the third quarter to see GDP growth sort of expand out just below 1%. So I think we're still quite muted on it, but it's heading in the right direction, and some of the numbers that are coming through economically are a lot stronger.
So nationally, is our GDP in a good state, or is it something to be concerned for?
Look, I think you've got Christchurch, but then you've got the other elephant in the room, if you like, and that's Auckland. And we've seen household consumption in Auckland really increase on the back of increasing housing prices. So outside of the Canterbury and the Auckland region, the rest of the economies, it's doing okay. Some are doing better. If you look at Otago, out of the 14 regions, we rank about 5th. So population-based, we're doing okay. But you've got to remember, Otago's got Central Otago and Queenstown Lakes, two of the fastest growing regions in New Zealand, incorporated within that region.
Excellent. Peter, I'll have to arrest you at this point. Fascinating discussing it with you. Peter McIntyre from the Chamber of Commerce. Thank you very much indeed.